So what I do here on this channel is I read the data, and what the data is telling me, I relay that back to you. That's why the title of this video is Why AMC Will Squeeze in January. There's a couple key things that we really have to go over that is screaming a short squeeze to me. And I'm not trying to get you guys overly excited. It might happen in February, but what I do know is that we are very close and this data is not lying to us. I'm not saying it's going to happen next week or even the first week of January, but what I know is what the data is telling me. So hit the like button for me. Let's get straight into this video. Consider subscribing to the channel. So AMC had a very strong day on Friday, up 19.10% regular trading, up 0.82% in after hours. And I did say, I do think this is the first leg of the MOAS. And what have we been saying the whole time here on this channel? The only way to get the MOAS is if short sellers feel the pressure. There's two ways that they can feel the pressure: by regulation and rule changes, and we have seen plenty of rule changes throughout the last year. A lot of them very important, some of them not as important, but overall that has added some pressure to the hedge funds. But the most important thing, the thing that we have talked about so many times here on this channel, the main thing that we need to see the MOAS, to see thousands of dollars per share, is we need to see hedge funds portfolio values go down, because it doesn't matter what happens with AMC. AMC could go to $2,000 per share if the stock market is at all-time highs and these hedge funds have billions of dollars to put into their margin accounts. It's not going to happen. But what do we know right now? Take a look at your portfolio. If you're invested in other things besides AMC, you're probably down on the year in your portfolios. You're probably getting beaten into the ground, unless you're in the 10 big stocks, right? Your Facebooks, Microsofts, Googles, Apple, Nvidia, Tesla, Microsoft, all these other stocks, these 10 big stocks that really control the markets, they're up a lot. All other stocks are down. PayPal, Square, all these other stocks. Look at ARK and Cathie Wood, crushed into the ground. That's the point I'm trying to say here, is liquidity is actually being crunched very, very hard, but the indices are at almost all-time highs. So you're really getting a false illusion of the liquidity levels that are in the marketplace right now. And that's the first thing to point out before we get into any of the other data. The other thing that I want to talk about is the January effect and what JP Morgan just said. We made a video about this, so we're not going to cover this too much in depth, but this is JP Morgan's chief global market strategist, Marko Kolanovic, who is well known and well respected in the community. And I know we don't give a fuck what JP Morgan says, but other hedge funds and institutional investors, they do. And if you're partaking in a lot of these shorting activities, with specifically, he calls out IWM and small caps, and AMC is the top holding in IWM, and the IWM is the ETF for the Russell 2000, then you're going to pay attention. If you have too many short positions, you're going to think about covering. If you're somebody who wants to play the January effect and what JP Morgan chief global market strategist is saying, you're going to start buying up these stocks that have incredibly high short interest. We know IWM has a short interest of about 50%. That is crazy, and that is creating all these synthetic short positions on AMC. Now I want to talk to you guys about something you have probably never heard of before, called the January effect. It says, while the rest of us worry about dropping a few pounds, eating healthier, or finally finishing that novel, yours truly for those interested, investors have another goal in mind. They spend December and January of every year with one thing on their minds: taxes. On December 31st, one tax year ends, and on January 1st, another one begins. That simple rule has led to a market-wide theory called the January effect. What is the January effect? The January effect is a theory which says that every December stock prices take a dip, and every January they receive a boost. This is driven by heavy selling during December and aggressive buying during January, particularly early in the month. Investors tend to sell off low-performing stocks at the end of each year. They then tend to buy those stocks back a few weeks or even a few days later. And there is a wash rule. If you sell a stock for tax loss harvesting purposes, you have to wait 30 days to buy that stock again. So if hedge funds were selling and doing all these different strategies with their positions, especially in AMC, but in the broad markets as well, they have to wait 30 days to buy them back. So if they did that December 15th, they'll have to wait until at least January 15th to buy those stocks back. And I think that's going to play into an overall market rally during this time. And that's when you're going to see AMC go through the short squeeze. Or AMC, I think, will likely start before the overall market does start to come up in January or even early February. Now, we also have some other things to go over, and this is a key and something that I'm watching very, very closely. I wish I could make this bigger. I'm not exactly sure how to make this bigger, but you guys can see the correlation between the days to cover is key. I hope you guys can see this good from how you guys are viewing this, but the days to cover totally inverts the stock price. So back here before the January squeeze, days to cover was 2.3, 2.4 days to cover. The stock went crazy, went up 10x from $1.91 to $19, $20 per share, and the days to cover fell at the same time. And then we did bottom out and started to rise again up to 1.72 days to cover before the June rally. And then the stock went crazy, went up another 10x in value. The days to cover shot straight into the ground. Now, the days to cover has been incredibly low. Only about 0.5 days to cover, but it has been climbing. Now we're at all-time high days to cover, at least in the past year, and we're starting to see the days to cover take its first tick down and the stock take its first big move up. So if we get the same correlation that plays out, days to cover is going to shoot down and AMC stock is going to shoot through the roof. So I think it's pretty clear what is going to happen. I think this is the first leg of the MOAS, and I think we are in for some massive gains coming in the month of January, if not the beginning of February. And just another quick key pointer, the last 20% day we did have was back here, August 24th. We went up 20.34%. And you could see the continued rally we've seen going from this period in time, $28.91 to $53. But the short interest is even much higher now. And the hedge funds portfolios, if you're invested in these mid caps or large cap stocks that are not your 10 to 15 big companies, your Apples, Amazons, Googles, so on and so forth, then you have way less money to service your margin calls when that does happen. So I do think all in all, this is very strong information that is leading me to make these claims. I hope you guys don't feel clickbaited by this video. I hope you guys found value out of this video. If you do, hit the like button for me. Consider subscribing to the channel. Let me know down below in the comment section what do you guys think about all of this information. Your opinions, your input is valuable as you are a part of this community. Make sure to check out the links down below in the description to get some free stock in public, as well as the link in the description for the buy and sell alerts and the link to go follow me over on Twitter as well. Love and appreciate you guys. Thanks for watching this video. Enjoy your weekend, and I'll see you in the next video.